InnoTrek, 6th edition, first virtual edition. Priya has been connected with us for a long time, and she's very well aware of the whole InnoTrek theme. So before we kickstart the InnoTrek 6th, I would like to give a shout out to all the people who are behind behind creation of these 3 action-packed day. Priya, Gauri, MR, PK, Ravi, Atul. There are so many people, Nish, Rana. There are so many people from India and US who have really opened up their network just to make sure that you guys get to connect with the right set of people in these 3 days. And this is just a stepping stone for you all. So we all expect you all will be able to leverage these connects, these introductions whenever you land physically in US. These three action-packed days, we have 60 plus business leaders. By the way, when I say 60 plus, it also includes the moderators, and trust me, all the moderators that we have in these 3 days, they are all someone in the industry. So do make sure you have you are able to build your acquaintances with all the speakers, all the moderators, the CXOs, the VCs, whoever is joining us. All these 3 days, we are going to have action-packed, intense discussions, learning from the peers, and all that happening. So without taking much of time, I wish you all a very best of luck to have the best out of this InnoTrek, and we look forward to host you again. Priya, over to you.
Thank you so much. Again, thank you so much for the opportunity for obviously speaking to you guys. We got to interact briefly, not necessarily interact, but we got to get to know some of you. Thank you for that pitch in Clubhouse this morning. Hopefully, you got to know each other. But again, thanks for the opportunity. As as it was highlighted before, I think it's critical for you to kind of double down on all of the engagements that's happening this week. To start off with, I would definitely request you all to turn off the video if possible. I would love to put face to the name, and names are awesome, but face is even better. So if that is possible, I think it makes it more interactive. End of the day, we want to make sure, Ayush, myself, and I, like Ella and I, we're not presenting something that you can go Google it up and find it on another YouTube channel, right? Like it's something that we want to make sure it's relevant for what you're going through and something that's helpful for you. With that said, a quick introduction about me. I'm Priya Rajan. I'm from Managing Director at Silicon Valley Bank. I know we bank quite a few of you here, which is not again, we did not talk with NASSCOM to have these picks done, but it just so happens that we work with some of the best companies. It shows up here. With that said, for the folks who are new, if it's okay, Sunil, can I quickly screen share? I did a really quick PowerPoint on SVB.
Sure. Shreya, can we give her the right?
Yeah, she has the rights. She can.
Okay, great. Yeah. Let me know if you guys can see it.
Yes, we can.
Can you guys see it?
Yeah, I'm.
Perfect. Yeah, I mean, it's literally going to be really quick, just so that you guys have a stage of who you're talking to and how is it relevant to what you're doing. Again, I'm Priya Rajan, Managing Director at SVB, been with the bank for almost 14 years now. With that said, bank has been around for 40 years. The way that we differentiate with any other banks, and I, sometimes they call me a bank and I'm sometimes I feel offended, but sometimes obviously that's my role. But the reason is because 40 years ago, now everyone wants to do a startup. Everyone wants to invest in a startup. But we have been working with this ecosystem since that word was a hot word and the wannabe word, right? So we work with some of the best innovation for the last 40 years and till date, and now we're continuing to do so, obviously with some of the folks in the room as well. What do? We work with companies all the way from early stage. It could be a company that's just getting into Y Combinator today, or exiting with an IPO and coming back, returning to restart a company. So throughout the growth stage of a company that we work with a startup. So early stage, then we call it venture funded. Then it goes through kind of corporate banking. We call it corporate finance. And that's kind of the stage of the companies. And post that, typically the company goes and exit in IPO mode. Depends on what they want to do. We also interestingly work with investors. So again, some of the stats are there. We bank more than 50% of the venture-backed companies, but also the funds themselves. So we get to see two sides of the coin of who invests and who gets invested, right? And again, put that through 40 years of data. So we sit on a ton of data as well. And obviously on the individuals as well through our private bank practice. Again, sector-wise, we're kind of split across different ways. We focus on different verticals, which is obviously kind of the energy resource innovation, which is also kind of the green trends that has been happening. FinTech has been one of our very, very active segment and something we've been focusing on for quite some time. Hardware infrastructure, life science, the ones that you guys may be mostly interested in more on the software side. Interesting talk maybe at a later point when you guys travel here is the wine industry as well. We bank a majority of the wines in wine in Napa.
Yeah,
and that's
just
the story
making
to tell.
sure your screen, your slides are not changing. So in case you're changing.
I am not sorry. I thought you guys are seeing my slides.
We are seeing the slides, but it's not changing from the first. We are still on the first.
Interesting. So I'm not sure why it's not happening. I'm happy to stop the screen share and I can talk through this and I'm happy to send this to you guys. I'm actually changing the slides. Clearly it's not showing up for you guys for some reason. Lastly, I would just say more so in the sense that we work obviously with different verticals, as I talked about. We're a commercial bank and we also have fund banking. So we have we invest in funds as well. And we have a private bank and wealth management. And then last but not the least, we have investment banking side. I do have a really nice logo that shows some of the interesting companies that we work with. I know Sunil mentioned that you have some of the amazing speakers that's coming up and speaking to you today or the next couple of days. Unifor is one of the companies that we work with, CleverTap, Razorpay, Pesto. We have here Mishu, OK Credit, Cut the Book. Pick any of those companies coming from India across verticals. This is what we're going to talk about today. There's going to be times you would need to look to US market. For a variety of reasons, folks come into the US market. One, it could be just because you're still solving an India problem, but you look to US market because you have global investors that is investing in your company, and you'd want to set up a structure that's easy for them. That's one side. Another side is where most of you guys fit in, is where your majority of the revenues are flowing out of US. So you want to pick a structure that is more relevant to what your business model is. So that's where you guys fit in, which is where a lot of the SaaS companies do. So that means you would have a subsidiary in India, you would have a holdco in US, and you would have a structure such that you have the revenues flowing in. End of the day, I think we're going to talk about that a bit. I'm going to poke Ayush for some questions around that. Those are key decision-making criteria that you need to think about. What is the right structure for you? When is that right time? What is the right time to raise? What is the right valuations to raise and all of that stuff? We'll deep dive into those, but we do work with a lot of companies across the stages. We've seen the pros and cons through the process. Again, each of your journey is your own, but happy to walk through any of the questions that you might have. And I think that's pretty much it on SVB. Again, my team member here, Ella, is there. Specifically, Ella and I oversee the India and EMEA market for the bank. And, Ella works closely with me on the markets. So if there's any questions around, obviously a lot of you are with us, but if there's anything around core banking side that you need help, absolutely happy to kind of take it offline. With that said, let's dive into the meat of this conversation today. Hey, most of you have entity structure already set up. So a few different things, I wish I could share the screen, but I was thinking about today's session. I said, if somebody comes to me and says, hey, I'm setting up an entity in a company tomorrow, I'm building my footprint into the US market, what are 10 top things that you would think about? Just that, if I have to kind of just distill it down, what are 10 things? And these are the things I thought. And Ayush, this is where I'm going to pull you into the conversation. And before maybe you start diving into some of your comments, maybe you can start with an introduction about you and Pesto as well. One, you need to understand your market. Is this the right market for me, right? And I think most of you have kind of, based on today's pitch that you did, you have chosen US as one of your core markets. And understanding the market is key for a variety of reasons. Is it the right SAM for you? And is this the right kind of go-to approach? Even through the exit, you might want to think through kind of long-term, what is the right? Second one, this is boring, but very, very necessary, the structure of the entity. right? As a lot of the companies, even billboards in Bangalore today, may have not made the right decision, right? Because they didn't think this through when they were at the stage that you were in. Highly profitable, really well-funded venture back, they're struggling because they did not make the entity structure right. So it's very, very critical. You need to think about your structure of the entity. Again, I'm going to poke Ayush on these questions a little bit on what does that mean? What does that structuring the entity mean? What are the consequences for whatever be the options are, right? Third is the right talent. Hiring the right talent is going to be key because a lot of your companies are now enterprise sales in India. It's a completely different beast when you're talking about a global market, US market, or any other market for some. So you need to make sure when is the right time to hire the local talent to kind of address the market as you continue to scale, right? Fourth one I would say is be agile, because whatever you know, just put it aside and just be open to learning and kind of adapting as you're getting these feedbacks, right? Especially with your sales approach, because a lot of the founders that I've worked with, some do really well, but some don't, right? Like technically, I think India comes in with such a strong tech talent, but not necessarily on the sales side. Don't take this as an offense, but this is just based on what we've seen, right? It's more about the storytelling. I can tell you like my 14 to 15-year-old, which is in the next room, they practice pitch like in their school years, right? Like they position themselves to sell from day one. Versus that's not like, I grew up in India, I'm from Chennai. So that's not, we're meant to be humble. We actually deliver 200 to present ourselves at 100. And I'm sure a lot of you can resonate because I can see head nods. But that's not the case here. When you're selling to US market, then you need to play this game, right? Like, so it's very critical that you need to position your sales approach to target to this market. Forget about kind of that back roots that you have. It's not that forget in a sense, in a negative way. It's just that you need to put them back manner and positioning in the way that you would other folks here would present. Critical to get lighthouse customers. I did write an article about this. When lighthouse customers doesn't mean like big, ginormous names. Ideally, that would be great, but it's not easy for all of us to get to it from day one. But it is lighthouse customers in the sense that the one that would help you get to that next level is super key for enterprise, because we've seen that make or break for a lot of these companies at the early stages, right? And I did mention listen to the feedback. That's another one. This is now the next part, that's all sales side. And, again, you have some experts coming in the next few days talking. I saw the agenda, which is amazing. You can dive into some of these and ask them questions as well. But let me come to the other side, which is more fundraising, right? It's super, super critical that you choose your right investors, because all the way from, yes, bootstrapping is fine, seed, pre-seed, angel, and all of these lingos are getting now mixed up. And I don't know what a round is, what stage it is. But whatever stage it is, it's critical that you pick the right investors for you, whether be it in India, whether be it outside of India or in the US market, right? So I think it's extremely critical that you think about who the right fit for you, who's going to help you take you from point A to point B. And not just taking from a sales side, right? Not just strategic positioning, but also be a person that you can kind of lean in and trust and have those conversations as you continue to grow. And surround yourself with the folks who understand your journey. It's not a pitch for SBB, but but banking is one of the key criteria. But it could be bankers, lawyers, accountants, right? Pick folks who understand the challenges that you go through your market, because it's easy to kind of go in with like, what's sexy, right? Like, somebody's opening an account in 2 minutes. The UI is awesome, or the law firm is cheaper, right? So, but it's critical that you understand who knows, because as somebody said earlier, the ecosystem is very small. We picked 10, NASSCOM picked 10 companies. It's random sampling, but we still ended up with banking several of them. It just so happens because the network is still small. So it's critical. So if you're looking for a connect to an investor or a feedback on an investor or trying to connect to a customer, we may not have all the answers, but we may know one or more who may be able to help that answer. So, relatable, have folks relatable to your story is going to be key to surround yourself with. Plan your raise effectively, because it's not just about the timing of the raise, but also dollar of the raise. And alongside that, consider debt, right? You don't want to dilute your capital, dilute your equity, because, the journey is just starting off. It's a long way to go. So you want to keep as much of equity left in your bucket at the end when your logo is going to go up on NASDAQ or NYC, right? So you want to make sure, and it's going to be a lot of diluted process. So don't give in early on. keep as much as possible, but given strategically what makes sense, right? And also consider to raise debt alongside that is less dilutive. Again, that's a completely different conversation. If somebody's interested, we can talk more. Last one, you guys are all going to be successful. These are unicorns and unicorns that's going to come out of here, but always think about give back, right? These are the programs such as this that NASSCOM is doing is exactly what's needed for the next generation entrepreneurs. So it's critical for you to kind of think about when you make it there, it's critical for the founders like you guys at that stage when they're kind of, and that's what Ayush is doing. So with that said, Ayush, I listed 10 things. What resonates with you and what doesn't? Please, you can argue with me. I know we have that relationship, but I want to make sure it's relevant to the founders listening today. But maybe start off with a quick introduction about you as well.
Oh, I'll give you like a quick download. So I'm trying to build Pesto. It's after a very simple concept that colleges were designed years ago, and universities are moving much slower than tech companies are. So we realized that tech education in general has to be a lot more continuous in nature, right? Like you need to keep upgrading yourself, otherwise your value in the market is going down. So we're trying to build a way in which we basically help people learn the latest technologies and build the cultural gaps which they have with respect to the international market, and we help them get remote jobs in countries like Canada, US, etc. And as an end result of it, they end up making 3 to 5x more money than what they made before, and we take a cut in that. So that's what we're trying to do at Pesto. Really, context about why I thought it might be helpful. I've gone through so much pain in the last 8-10 months. I wish I just had someone who I could riff off with, and who have gone through similar pain, and who could really just sort of share their experiences to minimize my learning curve, right? So I think I'm just here to share that. I'm basically a bag of mistakes and some things which I picked up along the way. So feel free to just stop us when you feel we are talking about something totally irrelevant, and I'd love to. I'm not sure about the format of this thing, but I'd love to take questions and talk about the very, very specific things, right? Like I remember I moved here in January, guys. Like as a founder, it's really painful. The COVID happens, your runway gets decreased, you need to find PMF, and you need to grow, and you just feel suffocated because you just can't make it happen, and desperate times, desperate measures. So I just came to US in January when it was probably like in purple zone California, and I was like, this is never going to end, let's just make it happen. So I'd love to share a lot of things, and I think I can add maximum value in talking about specifically sales, because that's most fresh around. If you're looking around selling in US, we have gone through multiple curves of trying to find someone in India who has sold before, make the time zone work, and then try to hire someone in Europe, and design the compensation packages and whatnot. Like I'm happy to dig very deep into specifics, etc. If that's helpful. Anything which you'd like?
Yeah, I think Ayush, maybe start off with because all of these founders are early stage founders. All of these founders today, they were in Clubhouse. We did the kickoff. So they gave a quick pitch on each of these companies. So very, very early stage. And I think they have 1 or 2 customers building into the US market. Some a little bit, so apologies, I know some are a little bit further along than others, but it's still early stages, right? So as you're building it up, I think it's critical that what are some of the mistakes that you did that now if you kind of turn back the time that you don't do on the sales side? I know Ella had the same question on a few others as well. So maybe we can start off with that.
I think I would start off by getting a coach. This is, I feel, one of the most underrated things in the ecosystem right now. People are not generally aware of the whole coaching concept, and I can also just drop in recommendations here. So there's this website called atomic.work, where you can just go on the website. You'll see a bunch of different people right away, and you can find people who are from sales background, and you can just book an hour with them and get them on board as a coach. I think what that really did for me is that it really unlocked the understanding of the market, in which I did not really have to throw things at the wall and see what sticks. I had basically the right kind of guidance and sort of approach towards what things look like. So it was, and I'm also a first-time founder, by the way. So all of this was pretty new to me. So I think getting someone as a coach, it doesn't cost much, surprisingly, compared to a sales manager, and it really helps you get your path ready. And I'd say yes, I definitely recommend getting a coach after seed round or seed or series A round. But I think before that, you can have friends or just ping people, who just love to help, or maybe get angels, who would go on to be coaches. As like a good strategy, what I did is that in my last round, I got a bunch of different founders, and took angel investments, and I targeted only founders who have exited their companies, which means they have time on their hands. So now they are not only helping me write down the strategy, etc., they're also helping me interview, find the right candidates, source the right people, so on and so forth, right? So I think at an earlier stage, I'd recommend that strategy, which works pretty well.
Yeah, and I know you're definitely humble. Talk about kind of your fundraise process as well. I know we're going to have a lot of deep dive into sales kind of conversations. How did you choose your investors? I know Anand Chandrasekharan is a part. He's obviously a dear friend, but also a first check for you, and several others as well. So how do folks identify those first checks, like how you did?
So a couple of things. I basically spent some time with one of my angels and learned a lot about how to run a fundraising process. I did not know that we need to run a process, right? And I learned more about running that process, which I think can be helpful here. So the first round, which we did, was with Matrix and a few other friends who were angels, which was back in the day, 2.5 years ago, which was pretty straightforward. But after that, we did another round in US where we got a bunch of different investors in there. I think one of the biggest mistakes that we make is that we generalize investors and try to think of people who are out there as sort of good investors. I think what's really important is, and before I move on, I think like Priya mentioned something which really stuck around. She said that choosing the right investor is really, really important, right? And I feel like, especially at the seed stage, I really, really believe that having the right, especially if you take institutional capital, having the right investor on your board is as important as the quality of a founder. It is not exact. It's like hiring an employee you will never ever be able to fire. The company will just die or it won't, right? Like it's that important. So yeah, I think like if we are at seed stage, taking money from multiple, it might be like a contradicting sort of opinion here, but a lot of people say that taking money from people who basically are multi-stage funds is a great idea, right? Is getting an investor really important? Absolutely not. You're a rock star. You can get down to sort of multi, like a million ARR, and then sort of try to think of doing your seed round. And you can also just bootstrap the company all the way, right?
Can I have a contrarian view on that one, Ayush?
Yes, go for it.
Yeah, I think one of the things I would also say is investor important. I'm thinking the question is being asked for the whole journey, right? You need to think about, and end of the day, you're thinking about building this is a like 7-10 year journey if it's a venture-backed company, right? From start to exit. And yes, that's getting shortened and shortened with the rising valuation, and not just valuations, but cash being out there. But for you to think about, do you have enough cash to kind of continue to kind of go through those pivots and scale, right? You need to have that access to capital to help you push through, because competition kind of doesn't slow down. It's still high.
Absolutely,
as you continue. So for you, I think that's one thing I would say. I agree that if you want to kind of do it just as a non-VC funded, there are a couple of examples in India that has done really well in the SaaS space, right? Have not raised anything. So I think there are examples, but I think it's rare, specifically on the SaaS side. I think that's the only thing I would say.
Yeah, I was actually talking about specifically like the pre-seed seed stage, and so the logic I was giving was that basically people who are multi-stage funds, they are going to divide their time based on priority. So they're going to give time to people who they've invested like 50, 70, $100 million in, right? And whereas if you take money from a small fund, which is like a 10, 25, $50 million fund, then you basically mean the world to them. They make money from you, whereas a large fund will make money from, places where they've deployed 50 to $100 million in. But yeah, totally great point. I mean, if you're trying to build a business in venture space, there is absolutely no way you can go without, in fact, getting a really good tier one investor on board is extremely important. Yeah.
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 And I know, Ella, you had a question.
Yeah, I actually had a question in terms of local competition. Just was wondering, like, obviously expanding globally is never an easy task. I'm wondering how you navigate local competition, because how do you make US customers trust, your brand and, under that, I mean, over the local champion or whatnot? And if you are able to do so, are you profitable in that, penetrating that market?
I think profitability in the startup world is like, sort of a thing which you should have, but it's like you always chase the growth. But I think to answer your question, like from long-term perspective, yes, you will always, if you have a good business model, you will be profitable. When it comes to competing with like someone in the local market, I think one of the biggest things which I've seen is if you have a superior product, people respect that value, right? How do you sell that product is a totally different thing altogether.
Absolutely.
Right? So I think I've had different experience in basically creating the sales structure for that product, but finding value which sells, and you can find metrics which gives you the right signal that where that this product is now selling, and you can sort of accelerate the growth and build out a sales team. Yeah, so I highly recommend getting someone local to build out the sales team. We can chat about that if some other question comes up, but yeah, it's like a really big pain point I went through to really understand that. I was in that, India se karenge zone.
And Ayush, there's a good question from Mayank as well. What is
Yes.
the biggest change that you saw in your journey after moving physically to US? I know you missed home food, that's a given. But outside of that, what was the biggest kind of challenge?
So outside of being confused with the accent, I think I feel like work has changed a lot with respect to your approach, because I just got access to more people who have done things before, and I got a coach and stuff like that, which has really helped us as a business to do things faster and make it a lot more streamlined, and have less unknowns. That's the best way to put it, right? So there were less surprises, right? But I think the biggest change, which it will look very simple, but I think the biggest change which I've found as a founder, as an individual in myself, is just being aware of my own health, giving importance to my own sleep, and focusing on my own productivity. I think a few things which I think I absorbed culturally really helped me, go sort of be a lot more productive than before. Yeah, I can also answer that question in like business sense if that's what you meant.
No, that's great. And I know there's a couple of questions that came in. One from Jimmy. Would you recommend to raise convertible note?
100%. So if by convertible note you mean safe, I think that's the easiest and the fastest ways to raise capital, because as a founder, I know like you're trying to figure out what PMF looks like. You're trying to figure out, how fast you can get there, build out the team, and 10,000 other things, right? And the last thing you want is 3 months of due diligence, because your runway might be 6 months, right? Like it's crazy. So I think I highly recommend going through Y Combinator's website. They're very standard safe, and I think investors also are very, very open to it now, because they realize that how much benefits it's giving founders and the ecosystem. So yeah, we very highly recommend doing safe notes.
And I think this is a great question from Nish. Sorry if I'm saying it wrong, but are all the sales team the same? Meaning the sales for SaaS versus fintech, the different verticals. I know that there's nuances related to it that you would need to consider, but what has been your experience, Ayush?
Sorry, you cut out a little bit there.
What has been your experience in terms of like that talent, specifically on the sales side?
Oh, it's the science is very different. I think it's just very, very different. I am currently trying to hire someone. So we went from trying to find people who have been hitting 100% of their quotas to finding people who have been hitting 200-250% of their quotas, right? And there are good people out there. There are people who are chasing, there are salespeople who try to chase closures, and they will always be focused on closing their quarter. Then there are salespeople who know that closures are a function of leads, and sitting today, they will always be solving for leads 2 quarters out, right? So I think like there's very big difference in how the kind of sales talent which you'll find. And then the other thing that changes is the startup land, right? Startup land is very, very different. A lot of salespeople you'll find who are doing incredibly well in large companies, but they won't be good because imagine if you're going to buy, let's say, Slack, right? Then you've already made up your mind. If you're going to buy HubSpot, HubSpot product itself has sold you. That's why you registered on their website. The sales guy is not selling you HubSpot. He's more like hand holding you to get there, right? So even though HubSpot might sound like a great brand to hire from, their salespeople may not be the right fit for the startup plan, right? Like, and there are some great signals to it. There's a book called Who, which I would very highly recommend. I'll write both of these. So there's one book called Who. There's another one called The Manager's Handbook, and it's a completely free online book. Oh, sorry, I texted Jimmy by mistake. So The Manager's Handbook is pretty phenomenal. It's written by the founders of Clearbit, who have both built a phenomenal company, and they have written how their approach should be, towards building out sales teams and managing them. So yeah, I think like hiring from big companies is a big no. Startup land, people come in and ask you questions like, what will be my onboarding process, and what are the tools I'll have, etc., etc. They're a big no, because like in the startup world, you don't know. You're more like, I need leads and I need you to sell this, and this is my product. You tell me, So there are certain kinds of people who succeed in a startup, and I think the best way to do it would be to go after people who have worked at different SaaS startups in US, but did not, don't have great brands backing them. So yeah.
Yeah, and we touched upon this like when I was highlighting the 10 things that I keep hearing from our founders. And this question, Ashwin, comes up quite often, especially working with local. I mean, a lot of these companies have one or more customers in India. Now they find out that obviously US is a better market for a variety of reasons. Obviously, large TAM, pricing is great, sales cycle is much shorter. There's less negotiations and premium being asked of you. So how do you, how have you seen the pandemic kind of environment change the kind of positioning, right? Like working with local partners in India versus US, how has that changed?
So one of the things which we have been very, very, sort of focused on since the beginning was that we wanted to build for the world from day one, right? Like our first 3 graduates from Pesto were placed in a company in Australia and 2 in US, right? And that's what we always wanted to build for. We wanted to make India build for the world. So I think our customer base, more or less, always remain majority US. I feel with respect to market, the reason I feel it's like a no-brainer to go after these markets, because the majority exists in the market. People are willing to pay, and people want to, sort of find productivity. For example, when I see startups in US, how are they selling? Their approach to selling is not to say my product is cool and see, you can do XYZ things. Their approach to sale is how they're optimizing their time and saving the organization money, right? Like, for example, here's this product for your sales team, and I'm going to save an hour a day for each sales rep which you have, and here are the case studies how I can prove that, right? that kind of narrative sells instantly, in these markets. People, if you show people that it's worth their time, they will buy it. And they'll just put down their credit cards. And there are different sales tactics. Like if you hire an account executive, their goal is always to get on discovery calls with people, understand what their needs are, and put them to attach their credit cards, not really charge them anything yet, but get those things. So all of those things are part of the sales process, and they understand the MQL, SQL world, and how the whole process looks like. So
yeah, and one question, this is coming up, it's very, very, very critical, and I get this way too often. What we touched upon this as well a bit. What are the specific structures under which an Indian entity with products and sales in India can set up a US entity and raise funds in India? I would even take this question a little bit different. I would even keep it more generic, because it may apply for a lot of you. When is the right time to create an US entity, period? And when is it the time to create US entity as a HoldCo? Because there's two different nuances associated with it from a tax and variety of purposes. So Ayush, maybe with your experience.
I'm not sure. I think like day zero. I know it's, I would actually make it. So whenever you know that this is going to work and this is great, I would actually go for it. Because in India, there are two things. One, you would want to keep most of your money in US because of inflation, right? It's a no-brainer. Like you would always want money which you're not spending in your bank account here. The second one is the advantages which it has, especially if you're looking to raise capital. By the way, I have another alternative, which I was recommended earlier, which is to build the parent company in Singapore. I've seen people do both, which has worked for some or the other.
And but, I can address that Singapore part, Ayush. But I think the question is also from Siraj in terms of raising funds. So from the structure that we see, right? Like there's two structures that India typically uses. Is either you use a Delaware entity or a Singapore entity. Singapore entity you want to use if your market, for example, I don't want to quote any names, but there are companies based out of India, which is very, very strong SaaS companies, but they're selling to Southeast Asia market. So you need to think about where your market is. Is your market Southeast Asia or your market like US? If your market is US, it makes no sense to set up a Singapore structure. Because end of the day, the reason why you're setting up a Singapore structure is because one, to attract the customers there, but also to attract the investors around that area, right? Because there are some big names out there. But if you're targeting a US market, it's a no-brainer that it needs to be a US entity structure. That's a given. I think that your question is, if the products and sales in India, there is a possibility. There are SaaS companies in India that are doing more SMBs, right? In SMEs. So in case if you're doing that, then your revenues are still very localized. So we do have companies that do structure such as a subsidiary, India HoldCo, but US subsidiary. That totally makes sense, because you don't want to make it a US HoldCo unless this is where the market, this is your prime market, this is where the revenues are flowing from. If the revenues are not flowing majority out of the US market, you could just open an entity to make the investors to give money much easier, right? Like, so that process is okay. But I think, again, right, Ayush, feel free to jump in.
Another argument that I think even if your customers are not in US, but your investors are, I think that might be like a strong enough reason to just go for a US HoldCo, because a couple of things. AngelList is taking over the venture capital industry. Like there are rise of solo capitalists. That is where the market is moving. Anand has built in, amazing fund. I know so many more people like Anand who are leveraging AngelList to do things. And if you have basically if you are in the AngelList universe, then it's just so much easier. If you just have, it's literally like half an hour to an hour. And the save gets signed and the money gets wired. It's so easy. The process is like very streamlined. I just responded to that as well. I think it got sent to someone's personal chat, but I literally said, Priya, that it only gets expensive.
It only gets expensive. Again, this conversation is honest, right? If you're looking to do a flip, think about doing it pre-A. I mean, A is also fine, but post B is where I've heard, especially if you've taken local angels, which are like local funds, which are say SIDB funds, which are INR funds, it gets very complicated. Again, I'm no tax expert. You do have to talk to the right law firms and tax expert to ensure it's taken care of, right? But
Awesome.
it makes sense so much to ensure that you're set up right.
Yeah.
I think there's a question on compensation for sales that works for
so yeah, I know this is the most important question, guys. It took a million years to figure out. So salespeople, I often ask this question to them: what makes them tick? Like why? Like, because you need a lot of motivation to do that job, right? You need high energy all the time, and there are two kinds of answers. One is money, and the second one is anything except money, right? In either case, the answer is money. So, and that is like a really good way, because now you can use it as a tool to help them find motivation, right? So initially, I struggled for the longest time because I realized that all these salespeople are so expensive, and why should I be spending money here and why not elsewhere, etc., etc. But then I realized that the best way to look at it is how much money I'm spending on any one person and how much are they adding to our ARR. If they're adding more value to your ARR, then you should just not worry about that at all. You can just keep hiring A players and they will constantly keep paying for themselves. So here's what I'll remind again. Salespeople absolutely pay for themselves. You'll always feel that they're too expensive. Don't feel that. They will almost always pay for themselves if the product sells. The second thing is sales structure, right? So basically, I'm not sure if it's the same in India, but basically we have an SDR, an account executive, who is going. SDR's job is to basically take in all cold inbound leads and set up outreach and Salesforce, etc., to do outbound campaigns and get MQLs and sort of onboarding calls for account executives. Then you have account executives who are hunters, whose job is to close a new business, right? You basically pay SDRs 60-20. That's the standard startup compensation here. If you're hiring someone in the Bay Area or around the area, I highly recommend looking at Utah, Minnesota, Mississippi, etc., somewhere in CST time zone, because that way they can prospect not just the West Coast but also the East Coast. They have like better time zone overlap, right? So 80K you'll have to spend for SDRs. You can give them their quotas, and 20K will be variable. For account executives, their job is to close a new business, right? And that is why they're more important for the market, because account executives bring a new business, and then there are farmers who are account managers who are going to basically grow that business, right? So AE work is a lot more harder, right? I highly recommend not hiring anyone who has not consistently met 100% of their quota, because there is a universe here where you will find people who have been hitting 120, 150% of their quotas constantly. So you want to get like the top 10, 15, 20% people from different companies. So account executives compensation are usually structured 50 and 50 for an early stage startup. Some people do 30-70, like 30 variable, 70 fixed. Some people do 40 variables, 60 fixed. I prefer 50-50 because then they really have skin in the game, right? So that is another thing. The way I was told that a lot of people take this approach in which they negotiate with account executives, I think that's also a very dangerous world to be in. I think finding a compensation package for yourself and just sticking to it, that this is what we pay, it either works out for you or it doesn't, is a much better approach. So we do 75 fixed, 75 variable for account executives. And account managers are slightly cheaper than that. So account executive will cost you $150K dollars. And they will, by the way, how to structure this compensation. So if you're paying someone $150K, they should bring in $1.5 million in business for you. So ideally, 10% of what ARR they're bringing in should be their pay. And because of whatever reason, business model changes, etc., if your monetization is not as good right now, so it's okay to pay them like, let's say even 50% of your ARR. But that's the math at which sales team scales, 10% of the ARR which they're bringing in. And then account managers are like farmers, slightly cheaper. And you can imagine that, this sales compensation goes all the way from 150K to 200, 250K as well for rock stars. But most people are fine with that. If you can do 150 uncapped, create a very simple variable package that for every $10,000 you bring in, you get so much. So they will be, sort of surprising you if you get someone on board who's nice.
I knew we were going to run out of time, but Shreya, thank you for reminding. I had told her I had a hard stop, so she's trying to remind me, but appreciate it. And again, thank you all for taking time today, but Ayush, huge thanks to you. I know we have just scratched the surface. We might need to do round 2 of this conversation. Yes. But again, if it's okay with you, maybe we'll share your email with the founders here, and folks can reach out to you if there's any questions. But again, Ella and I are here as well. If there's any questions that you guys need, again, happy to help, and we're do stay in touch. And good luck with the rest of the program.
Thank you so much, Priya, and thanks a ton, Ayush, to come and share your thoughts. I mean, it was really, really insightful. Loved all the interactions. But guys, the good news is we are going to continue the sales discussion. The next topic that we have, and the line of speakers that we have are all from the sales background. So without wasting much of time, I'd now like to invite Shyam. Shyam is India partner for Dallas Venture Capital and has helped us a lot in defining the InnoTrek structure that we all are enjoying now. Shyam, over to you.
Thank you, Sunil. Has Arjun and Gary joined, or they?
Yeah, they are here. They are here.
Awesome. Thank you, Sunil and Shreya and InnoTrek team for this opportunity. Good morning and good afternoon and good evening wherever you are. And my name is Shyam Penimaka. I'm a partner with Dallas Venture Capital. I'm based in Hyderabad. A brief introduction about Dallas Venture Capital. We are a Dallas and Hyderabad-based cross-border venture capital firm. We have been investing since 2012. We have invested in 24 companies so far, and also exited out of 5 companies. And our typical target company that we look for is companies raising their Series A and with a post-revenue. And we typically invest anywhere between $2 to $5 million. And I see some of the familiar faces here. We have been interacting with some of the companies. Hi, Sandeep and Rishika. And I would like to congratulate all of you for being part of this cohort. And I'm pretty sure it's a stringent selection process that has gone up. And if you have crossed that and come this far, it's definitely a great achievement. I see Mayank also from Italite. I think I did meet him once. So congratulations to all of you. So to start the session, I would just like to give a little introduction about my own experience and exposure on this topic. So we are going to talk about fundamentals of selling SaaS products in the USA. And obviously my own experience comes from my earlier startup called Quado, as well as part of being Dallas Venture Capital as a partner. So one of the programs that we have in DVC is what we call as a DVC Advantage. And being a cross-border venture capital firm, we help our portfolio companies in getting rapid scaling, and not only in the US, but also in India. So if you are a US company, we help you to get US customers, and we have an extensive network of partners as well as venture partners and advisors. Through the help of this extended team and our own team, we work very closely with the startups to get the customers for our portfolio companies. And we have weekly touch points, and we do a weekly review of how each and every one of our portfolio company that is part of the DVC Advantage program is doing. And if there are any blockages in sales process, we come in and we try to help to unblock those, etc. And especially companies from India, as we are all part of this program. Selling in the US is a very, very complicated process and very unknown territory if you are going there for the first time, if you haven't worked there at all. That's where our DVC Advantage program with cross-border advantage also helps the startups. So some of the questions that I'm gonna ask my panelists today are based on my own learnings after interacting with so many startups within our own portfolio. And I hope they will be of relevance and they will be of use for you guys as well. So let me quickly call out my panelists, and I would like to request them to introduce themselves. So we have Arjun Iyer from UiPath. Arjun, please go ahead and introduce yourself.
Hi, folks. Can you hear me fine?
Yes,
Yes.
sir.
All right. Hi, all. This is Arjun Iyer. Like Shyam mentioned, I was actually perhaps the third employee in UiPath, the Americas. Kind of saw it a bit of, I don't know necessarily if it was all strategy, but I think a good bit of luck too, where we grew from about 6 million to, I think it's over 650 million today, about 4 years. Kind of, I don't even know how much of that feels real anymore. But yeah, I was fortunate enough to be part of that journey. And before that, I was pretty much in the outsourcing world for a long time with the likes of Capgemini, Cognizant, Dell, Emphasis. And prior to that, of course, I was with KPMG and Arthur Andersen right after becoming a chartered accountant. So I grew up in India, but been in the US for about 12 years now, primarily in sales. And of course, now in sort of working more with startups like yours. Happy to be here.
Thank you, Arjun. And my other panelist is Gary Oliver. Gary, please go ahead and introduce yourself.
Hey, Shyam, thank you. Arjun, good to see you too. Congratulations to all the companies for making it to this point. In reading your profiles, it's very, very exciting to see the kind of scale you've gotten. So I appreciate being here. Very quickly, I run an organization called Accelerate. And what we do is we find companies that are between $500,000 to $5 million in revenue, got great early product market fit, and some good early customers and are looking to grow and expand to global markets. What we do is we select them and then we connect them to a network of C-level executives around the world in the top companies. So the idea being to be able to provide warm connections to help them connect into the potential customers and potential partners, et cetera. Prior to this, the first half of my career, I was at big company as a IBM, ran a couple $1 billion business for IBM. Then I went and ran IT for Visa, the credit card company, and then did kind of a mid-sized public company. And then the last half of my career, I've been doing startups, either as CEO or chairman. So great to be here. Looking forward to the dialogue. And back to you, Shyam.
Yeah, thank you, Gary and Arjun, for the introduction. So if I may, let me start with asking my first question to Gary. So Gary, as you know, some of the companies today that we have here are yet to enter US, and few of them have already entered. But one of the questions that everybody would have in their mind is, how do they start this entire process, right? Getting into the US from a sales engine start point of view. How do I start the sales engine? Do I start with hiring people right away, or should I go and get some advisors, or should I get some channel partners or partners? So these are the different things and options that everybody will be thinking about. So I would like to, with your experience and expertise of selling and running enterprises organizations, as well as working with so many startups with your current organization, I would like you to give your perspective on that.
Sure, thank you. I'll give it to you from two angles. One, as we spend over $1 billion a year on technology at Visa. So the dirty little secret is every large enterprise, doesn't matter how big they are, they're always looking for competitive advantage, and they love startups if they can bring competitive advantage. Now that's the positive. The flip side is they're always worried from a risk perspective, right? Do I take a company that's too early, or maybe they have security issues, et cetera. So what my early investors always told me is, don't expect someone else to do it for you unless you've done it yourself. So in a lot of cases, it really comes down to the company, the founder, making those first set of sales in the US directly. One thing I would tell you, just like you were talking about, Shyam, with your organization, find a way to get either advisors or board members or others to help you get those warm connections with potential customers and partners, because that's going to cut a good 6 months off of a sales cycle. Find people that are interested in what you're doing. They want to help you. They want to help you get a beachhead in the organization. That can also be partners, right? If it's a partner that you currently have in a geography and they've got the capability to go overseas, it's great, because in many cases they bring their reputation and their brand to those enterprise customers. And so you're then associated with them. But what I found most of the time is that it is either the CEO or depending on where you are in the scale, depending on the sales organization you have, it's typically a combination of the CEO and maybe a lead salesperson doing those first set of deals. And I look at it as sort of establishing a beachhead. Once you have the beachhead, then you can start to work on partnerships. You can work on growing the organization. But I've always found you kind of need to do the hard work and go get your first set of customers, but try to get some advisors or others to help you open some doors.
Great, thank you. And as Gary was saying, the idea is how do we cut short the sales cycle? And as we all know, selling to enterprises in US is quite a long process, sometimes 6 months to 1 year. And thank you, Gary, for your inputs. Arjun, you would like to add anything on top of what Gary has mentioned?
No, I think that was spot on. The only thing I can add is, having sold and worked and lived in India and then moved here, I definitely believe in one thing. Just as we would not get a white person to start selling into India sitting out of here, there is definitely a value in you living here and you selling here. Right. So, yeah, to start with, you could, because, it's a connected world and there's enough awareness, of the US and India and so on, and then vice versa to an extent, but that's not sustainable. Right. And especially you as a founder, you as a leader, if at least one of your co-founders is not living here, has not experienced that, it's very hard, to truly know what is running in the customer's mind. And there is so much change, especially the last 4 years that we've seen. This trend is going to continue. What used to take 10 years now takes 6 months, right? So I think even more reason why a local presence, I think, will be very important for companies that are looking to start up and grow fast.
Great, thanks, Arjun. So just continuing on that, as you know, the last 1.5 years with the pandemic, it has become a very big issue for, even if I want to move there are a lot of visa issues and restrictions, etc. And moving for a founder from India to US has become a big problem. So what have you seen in the last 1.5 years during the pandemic side, how the sales cycles have pivoted, and also virtual selling, is that a possibility, or have you seen some results from any companies that are doing that?
Yeah, I mean, I don't mean to minimize the pandemic in any way. I've in fact suffered personal losses in friends and family, but I think if anything that happened was customers have become so much more open to remote selling. I mean, even if I want to show up in person, they're like, no, stay where you are, if you don't want to meet in person. And so, yeah, I mean, even operations, every single thing has got challenged so hard that if it doesn't work remote, if it doesn't work, with robots, if you will, they don't even want to accept it as a solution anymore. So from that perspective, no, totally it helps. But I mean, back to the point on visas, I think it's fair to say there are enough of us already in the US. You don't have to move yourself, hire somebody that's local, right? I mean, likewise, a company from here is not going to start having expat CEOs moving from here to India, right? You're going to hire a local person. So that's an easy solution, right? But I think the pandemic has definitely created a different kind of paradigm, if you will. I think processes are getting redesigned from start. The outsourcing world was always focused on someone invents a process, it runs for some time, and then after some time, a consultant comes in and tells you how bad it is, right? And then the whole chain starts. 6 months, you throw an army of people, they tell you what they do, and then you write process charts, and hopefully you find a solution. Now, that's not accepted anymore. There are scientific data-driven tools like process mining and task mining and so on, where you need none of that. You literally is like a dot sitting on the corner of your screen, reading what you do, getting data right from the source. So it's not even about people telling you what they do, because that's written with bias. In fact, they may tell you what they do, but they may not actually be doing that, right? Or they may think that's the way they do it, but there are so many exceptions that get created and so on and so forth. So now, what used to take 6 months takes 6 weeks or 3 weeks even, and it's totally data-driven, unbiased, and 100% coverage, not even a sample. Right, so you have the luxury of recreating, redesigning processes on, RPA platforms or other sort of AI-driven platforms, right? So I think that is going to fundamentally change the way any new process is designed. It's almost like how Tesla kind of has come in and then is totally disrupting the combustion engine market, right? Till recently, it was still an enigma. Yeah, maybe it won't work, or more maybe even like say crypto, right? everything is getting challenged from scratch. So in that perspective, I think we should all be bold enough to say, yeah, let's rethink an idea from scratch, from cloud, from machine first, and so on and so forth. And then, help the client see the value through that, and then, almost hold yourself to that promise to deliver on it, and you'll start to see change pretty quickly. I think you're coming into a very fertile and accepting sort of state of mind, especially in the US.
Okay.
So I would just add to that. The people I talked to, their enterprise sales, it used to be that you couldn't make a deal unless you're walking the halls. It was kind of a committee sale. You had to make sure you touched on all the people in the organization, and things really changed with the pandemic. All of a sudden you could get access to these people. They're more open to do things. I think it's a huge advantage to smaller companies, right? Where they don't have a huge sales force. They don't have people that are always there on site. It's from a selling perspective, it has really changed the dynamic. And in fact, my son's a relatively young sales guy in a cybersecurity company. And he says, Dad, I can get access to CIOs and CISOs. I could never get to them. Now they're picking up the phone and doing a call with me. So it's really kind of changed the entire dynamic from a selling perspective. And I think that's a great advantage for earlier stage companies that don't have an army of salespeople.
Thank you, Gary and Arjun. So two things I hear. One, physical presence is definitely important. At the same time, selling virtually because of the latest pandemic situation is also possible. So, and Arjun mentioned there are a lot of people already there with the experience. So try to find more Arjuns and you are good to go. So, okay.
I didn't mean that, but.
By the way, I know Arjun for quite some time. We were neighbors as well. So sometimes I take a little lighter moment with him. So Arjun, next question is, as you know, a lot of companies in India, they might be selling to large corporations. But since India is a little bit price sensitive, though you may be selling to one of the largest banks in India, what you may be getting from an account value perspective, it might be much lesser. And if you go to the US, you can get similar value out of a small company or a mid-sized company as well, right? But the startups might be looking at SMBs as well as enterprises, and from a value perspective, they may get equal value from SMB, but from strategy perspective and branding perspective, they would like to definitely get enterprise customers. Also, selling to SMB might be a little bit relatively easier compared to selling to enterprises. So how does one go about this? Where to start with? Should they start with in a small company or medium-sized company, or directly attack enterprise customers? Any thoughts and views on that? How did you go about it when you were trying to do it? Anything with your current company or previous company that you can share if you can?
Sure. There is no sort of silver bullet answer to that, but I think I've seen this approach work. I don't think anybody needs to limit themselves to either just SMB or medium or large and so on, right? I mean, if your product is something that will add value to any customer, regardless of their size, then you approach all of them together. I mean, you may deploy different teams and different strategies to appeal to each of them, but I don't think anyone needs to hold back on saying, I'll start only with small because they're giving me a meeting, or they're a little more amenable to me versus the big guys, will take some time. I don't think it necessarily works like that because remember, again, from experience, that a lot of the Fortune 10, 20, all those size of companies too are constantly looking for alternatives. Every MNC, advisory company is ripping them off. I came from one, so I kind of know that too. The kind of billings that they have is all about how can I keep the meter running, right? And so the large companies have smartened up too over the years, where they're saying there's several smaller alternatives. They work equally well. They give them a lot more flexibility. There's no sort of hardbound contracts where you have to commit to multiple years of several dollars and so on. So those are all appealing alternatives, right? So as long as it works, and as long as you're able to give them enough comfort around security and compliance and even viability, right? That the company should even survive after a few years, because those are the things that run in big companies' mind, right? Their name is at stake if somebody signs you up. So if you can give them that comfort, by all means. I mean, when I started selling with UiPath, I forget robotics. There used to be Blue Prism and Automation Anywhere. They were the ones that were known, right? Nobody knew UiPath. So when I would go to, I don't know, Pepsi or Walmart or anybody else, the question I heard was, where is Romania on the world map? It was not at all about the product, right? They wanted to know, where is this company from? Who is this? And so on and so forth. And, you've seen the rest of the story. But the point was that, as long as we could turn around and prove that, yeah, this is my product, this is what I've sold to, these are all the security and compliances, this is how I will, survive, these are my, funding partners, and so on and so forth. It's a reasonable appeal. And once you have it, you're able to back those customers. Yeah, you are more flexible too in those initial stages. You give your product more easily than others. You have a better community around it, whatever that appeals and then makes you differentiate. If you're at it, I think the size doesn't matter, because remember, let's all remember, we're still selling to people. We're not selling to robots, right? So every sales trick it does still apply, big or small. So my thinking is go all out. There's nothing to hold you back.
Thanks, Arjun. Gary, you want to add anything on top of it?
Yeah, I think that was really smart. My experience has been more in the enterprise selling, and I think it really depends on the company and the solution. Just a couple of thoughts. One is, in very large enterprises, sometimes depending on the organization, you take a land and expand capability, right? So where you get in where the signing authority may be at a director level for 50 or 100K, you can go in there and you can land and you can expand and go to the next solution. Next thing you know, you're doing a couple $1 million, and then you have a meeting with the CIO to do some kind of enterprise deal. So this is very much dependent on the solution set for the organization. The other thing I would say is that there's a certain size company where, in a kind of a mid-sized company, where they have all the complexity and challenges of a large enterprise, but they don't have the IT staff. So if you happen to have a solution that automates some of that, those are sometimes great ways to get your foot in a new market or territory, is to go in and solve some of those solutions for kind of the mid-sized company that has the same complexity as the big guys. They just don't have the big teams or budgets. So if you have a solution that helps them automate some of those processes, that's a great way to start. Those are a couple points to add to the previous comments.
Great. Thank you. By the way, folks, we will open up the floor for questions in the next 10 minutes or so. So if you do have any questions, you can get them ready and you can ask. Shreya, if you can actually get the questions and ask the panelists, that will be great. If they are sending it in the chat to you directly or in the on the open chat. Thank you. So the other question, next question I would have for Gary. Gary, is one of the ways startups can work is definitely partnering. That's what you have mentioned earlier as well. So there are a lot of SIs, systems integrators, and some of the startups do partner with them. And actually, some of our portfolio companies also have partnered with SIs. And then you have global SIs, and there are mid-size SIs as well. So how do you go about partnering with them? Any thoughts on that? And also within the SI, obviously, most of the SIs have, every SI has its own organizational structure. There is a horizontal structure, there's a vertical structure, and there are few companies which are driven by horizontal revenue targets, others are driven by vertical targets, etc. So identifying the right influencer and also decision maker for whom this partnership with the startups matters is also something of important. So what are your thoughts and views and what we have seen on that front?
Yeah, great question. I think integrators can be a fantastic way to go to market. One is they have the relationship with the end enterprise. They have great credibility. They have brand awareness, et cetera. The thing that a lot of early stage companies forget to remember is that it's all about their revenue. It's not about your revenue, right? So you've got to find a way to make them money. So if your solution happens to be the glue to drive a broader solution or a set of additional consulting capabilities or a new offering that they can take to the enterprise, then you can get in as part of that solution set, right? But you have to remember, you're also competing. It's like the shelf space in the supermarket. Can you all hear that feedback as well?
Yes, that seems to be a little feedback.
Okay, how about now? Okay, that's better. What I was going to say is that if you can find a way to fit your product or solution into a broader set of capability they're trying to take to market, it's a wonderful way. My first startup, we did our first 15 or 20 deals direct. Then we found some of the global integrators, and we did 40 or $50 million over the next 3 years through them. Number one, we had a single contract with the global company. So every single account they took us into, it was just an addendum to the contract, right? All we needed was an addendum and a PO. We didn't have to negotiate the contracts. Secondly, they had account teams responsible for each one of these large accounts that they service. So once we were into the solution set, then they could take us globally. In terms of kind of the organization structure, it really depends on the integrator. I would say follow the money, right? It's where where you get closest to the revenue. So if you have, for example, a lot of times these relationships start where you go to a single team that's responsible for a single enterprise customer. And if you can solve their problem, that becomes your entree into the broader organization to become a standard or one of their centers of excellence, et cetera. So, those are some ways to enter into the organizations. Just again, depends on the solution. It depends on the vertical, but yeah, integrators can be fantastic, both, small integrators as well as large integrators.
Yeah. If I can add just a couple of more thoughts, that was very useful, Gary. I think, any SI, that just like all of you, they spend a lot of time and resources building those relationships, right? So there's a lot of trust that companies have with these SIs. So naturally, if they were to recommend or embed you in their solution or resell and so on, it goes a long way. Besides giving you all the sales intel on, who really is calling the shots on a deal, or what to sort of watch out for, or what can sweeten the deal, and so on and so forth. The other angle that you can also think about, especially in the US, certain customers, certain sectors have, you can call them almost middlemen, if you will, right? Because there is this whole concept of minority owned, women owned, or certain providers that have gotten into the into the approved vendor list and so on. And there are certain requirements to fulfill. Once you've sort of gone to that stage where the company is ready to buy, you may actually get the whole process stalled simply because you don't necessarily have the paperwork or certain sets of approvals and so on. It's useful to be in the network of some of these companies. There are several of them in that list now, CGI, and there are several other minority-owned companies, especially for federal government and state government. You can think of those, and also certain countries like Canada. There are those specific ones that you could look at from a tactical point of view. The SIs, of course, you can certainly consider targeting certain customers. And the last thing I would say is it's important to have your policies and structures in place, because especially when you're a smaller player like we were, you tend to get taken for a ride by the larger companies and even SIs for that matter, right? Because they know you don't know the game, so they kind of unwittingly get you to sign stuff like most favored nation clause, or certain preferred rates that are there for perpetuity and so on and so forth. You're not realizing that you will wisen up over time, but you do get stuck, and it's very hard to get out of those contracts. So whenever you are setting it up, I think those are traps to watch out for. And also you may be even getting into agreements that are illegal in a way, right? Especially resell through partners. You cannot sell at different prices to different partners. I've seen that firsthand, where especially partners in India would cry that thing about, oh, well, we are in India, so we need better rates, because it doesn't sell. And so they would, that company, which is actually based in the US, would simply buy it through the partner in India because they were getting better rates. Whereas, the company that is selling, in your case, you may end up selling at different rates to different regions, but for the same product. So you can get into a lot of trouble because of that. So it's important to understand where laws dictate certain prices and then structures, and where you have the flexibility to sort of make it a specific business deal.
It's a great point, and be true to your business model too. If you're trying to build recurring revenue, a lot of times these partners will try to do something. If they have 100 clients, they'll try to do a single deal with you. There might be a funding round for you, it might be a non-dilutive funding for you, but it breaks your business model, right? Maybe one-time cash, but then they can use it for all their clients. Be very smart about that. And the last thing I would say is watch your revenue concentration. That first early startup I mentioned to you, where you got a $50 million through this one particular multi-billion-dollar partner, year 3, they got acquired by a larger partner. And so, you've got to watch your revenue concentration. It's very seductive to get going with these partners where they're driving 80, 90% of your revenue. Just make sure that you have some distribution of revenue so you're not counting on a single partner for your business.
Okay. Thank you, Arjun and Gary. My next question is to Arjun, or even Gary can also take it. Anybody is fine. So one of the things that we have is startups usually initially try to get customers through references and the advisor network, etc. But we also have obviously the marketing function and inside sales function. And not all the companies might be having them completely established. So in the initial phases, as well as to grow in the US, what are your views on how strong or when should startups look at bringing in inside sales organization as well as marketing, and what kind of collaboration should happen between sales function and these functions? Any one of you can take it.
Yeah, go ahead.
Go ahead.
I was going to say, my personal view, the more the better, right? I think we all make the mistake of going a little cautious initially, trying to see if it works. 2 million going to 6 million is more than 300% growth. So that feels good. But I think we are all like movie actors. We have just about 3-4 years to make it all happen, earn all the money that you can, because before we know it, somebody else has already copied the idea or, come up with something better and so on. So we die a quick death. So I would say, inside sales, marketing, everybody bring it on as much as you can. I mean, this whole distinction between inside sales, enterprise sales, strategic sales, all of us will sort of need to wait to even reach that critical mass where you start to see the value of, having separate teams for each of them. But the sooner you can, the better, because, many times when the solution is good, you get flooded with demand very soon, to a point where you're not servicing those that deserve it, right? So you may end up losing some customers in the early stage. So certainly if you can, keep looking out for that distinction. I don't know, there's no sort of magic bullet to say this is a point after which you should do, but you certainly will see the need for different talent. Inside sales is just almost robocalls, right? It's classic manufacturing, ABC, C-class items, large volumes, low value. Right. So, and then likewise, the other apex, you will have to spend time. You will also have to have salespeople that have the patience, that have the connections, that don't mind not earning money in a certain year, but making it all up in year 2 or 3, whatever. Right. So that will definitely help you if you invest in it early on. And then marketing, I can't say enough. You do one deal, the smallest of deal, you got to blow it out of the park in terms of, telling the world how great it is. Right. It may not be anything as much as it sounds, but that's the only thing that takes you to the next deal, and so on and so forth. And having a referenceable customer right in the beginning, even on LinkedIn, is fine. But that is so much valuable, because that's where most customers try to negotiate with you. Oh, well, I won't give you a reference. Then I want so many more things in return, and so on. But that reference is extremely valuable, right? And the better you are at marketing it constantly, in different forums. We have so many different formats in which you can do that. I think most startups make the mistake of not investing enough in marketing. So if I've learned anything, is I would put a lot of money in marketing.
Yeah, one tip I would add to that, what we found very, very helpful, was it's very hard to get on the radar screen of a Forrester or Gartner without spending, $80,000 or $100,000 a year for their services. But there are a number of these smaller boutique analyst firms you can bring in. They'll actually do a complete write-up on you. And that's a great way. They'll do a case study on one of your customers. And next thing you know, you can start to get into some of the materials and write-ups, and that starts the snowball building. Even if to begin with, you only have a reference from a different geography, it's okay, because it's about the product and the value, and make sure your customers are willing to talk about the value that they got. But that's a tip is you'll find those analysts. They'll partner up with you. They'll get to know you. They'll get to know your customers, and they could do some really great stuff for a very reasonable amount of money to get you on the radar screen from a referenceability point of view.
Is Shyam here?
Tom, can you hear us?
He's frozen.
I think he's dropped. Okay. So in the meantime, can we ask some of the founders who already have posted their questions? Jimmy, would you like to raise your question, or it's already covered? I think it's already.
I can actually, raise it. So, probably Arjun, if you can answer that. In the early days in US, what worked for you guys in the partnership? Were you kind of used to giving revenue share, or did you agree to a transfer price? I mean, and let the partners add whatever they want to add on top. So what worked when you were imagine you were initially like $1 million or 2 mil ARR in US?
I think the thing that worked the most was the strategy we took of keeping it almost even between selling through partners and selling directly. Because in the market back then, you had Blue Prism that took a partner-only approach. There was not a single sale that was direct. Right? Everything was sold through the partner. Their sort of strategy was you get revenue to the partner, they're naturally going to sell you more, and so on and so forth. Automation Anywhere had a different strategy where they were trying to sell more on their own. We took a different approach because we felt it's important to get feedback from the customer throughout on the product. Because the moment you always sell through partners, yeah, you'll get revenue, you'll get a lot of access, but you don't necessarily hear the true story of the experience the customer has. In retrospect, I think that was a very good move that we kept both channels open. But as far as selling through the channel itself, one, it was partly opportunistic. We had to go with what was available in the initial stages, where if the partner wanted to resell, right, and then sort of make good on the margin that we were giving them, etc. That was, definitely available. But we did also try and encourage managed service as an option because, at times, again, over years things have changed a lot. But 4 or 5 years ago, the focus was a lot on outcome too, where the partner was asked, "I need 40% committed productivity," or whatever else, right? So embedding an RPA product into that. It almost was like, putting an Intel chip in a laptop versus AMD chips. It didn't matter how much you paid for those chips or how many chips you used. It was about how good the laptop was, right? So in a way, that was a better sale because the focus was on the outcome, on the value created overall than specifically on the product, because then customers would start to bargain separately on the product, separately on the service, and so on, right? So you didn't necessarily get the best deal in the market. But as over time, our own name in the market grew, our product was recognized, and so on and so forth. It definitely became easier to sell directly. Customers, bought only what they needed. So if they didn't necessarily need the service, then they could decide accordingly, or even use their own resources and so on. So the mix kept changing over time, but just the larger philosophical strategy that we'd keep both channels of direct and partnerships, that has always helped us. I hope I answered your question.
Yeah, actually, my question was on what engagement models did you use with partners? Was it, anyways, actually, that leads to the next question. And, for us, we are doing, I know you told it's good to hire local sales in US, and a few of us still don't have that liberty to do that. And we are still relying on inside sales. A lot of those exhibitions happened virtually in last year. That was an edge for us. We were able to attend those. So, for us to direct sales always makes sense. We try to do LinkedIn, cold calling, cold emails. What are some of the other growth hacks would you recommend that we should do, at least for next 6 months, sitting from India, for US direct sales, especially for the enterprise companies?
For enterprise, my suggestion is that, if you're going to do robocalls and just LinkedIn outreach and so on, that doesn't necessarily work, because a lot of these companies have set up fairly strong filters where your email doesn't probably even reach them. I continue to get a lot of those kind of spam outreach, where AI companies reach out to me and say, "I'll help you build your sales team," and whatever, this and that. Everything goes into spam folder. Some, come through. So I don't necessarily know if that works. A warm introduction goes way beyond that, right? Several customers that I've seen, I've gotten myself, were all through, another customer that met, this prospect at a conference, where, they were exchanging ideas and so on and so forth. And there was already a reference in that case, right? that works way faster, especially because enterprise companies also have much more risk to carry. Small companies, smaller size deal, it doesn't matter. Fine, you may even have a trial version for some time. So there's really not much to lose. Whereas when you're talking deals of multiples of millions, somebody's head is at stake, right? So naturally, a warmer introduction, a more thorough process that they have to go through, etc., makes the difference. So just trying to reach them more, an email, phone call, or marketing event, etc., will get you some, but it wouldn't last. It'll work with smaller customers.
I think that is a tremendous point, is find an organization or advisors or someone that can get you warm introductions at the decision maker level. And that's going to take 6 months off your sales cycle, because these companies, it's not just the money, they're risking their brand at some point. We had a situation at Visa where a laptop that had a bunch of card numbers walked out of the data center, and it cost us $60 million, and did untold impact to the brand. So this is what these enterprise decision makers are thinking of. They may be excited about the technology you have and what it can do, but then the flip side of that is the risk of deploying it through the enterprise. So the more you can come in with that warm introduction, the more you can come in with credibility, it's going to make your life that much easier.
Great. We have 10 minutes left, so let's try to cover up most of the questions that we have from the audience. Ganesh, would you like to go next?
Yeah, thanks, Sunil. My question was that in enterprise sales, typically, what is that we can do to reduce friction? And one way to reduce friction is pilots. And we haven't given any free pilots so far, and that sometimes becomes a bottleneck. Right now, any advice on is free pilot a good way to enter, or people consider you desperate?
I'd like to take a crack at that and love your perspective, Arjun. I always felt as though there's a time thing, right, between a free pilot and a paid pilot. But a lot of times a paid pilot is sort of a way to test their level of sincerity, how serious they are. Even a signature on a piece of paper, right? You can always credit the pilot towards the deal. We used to do that all the time. So as a 20K pilot or a 50K pilot, if they went ahead and purchased the product, we credit the pilot back towards the purchase price, right? So even though sometimes the sales guys didn't like it because they wanted to do all these free pilots, I can tell you when I was at Visa, my guys in the organization, they would love free pilots because they're going to play with stuff. And then the CEOs of these startups would try to get to me, and I'd say, I've never even heard of you, right? Because unless there's budget assigned, they're taking advantage of the company. So I would say, my preference is a paid pilot, but one that you can try to make it as self-service as possible, right? The faster you can get in and do the pilot, show the value, and then convert that to a deal, the better.
Thanks, Gary.
Yeah, I would echo that. In fact, I'd go even more aggressive. I would say yes, definitely free pilot, but limit the time. Don't give them 3 months or anything. Give it 1 month so that they know this will stop working after a month, especially if they get hooked on. And secondly, after the pilot is where you use it to your advantage, where they like your product and they say, I want discounts. Where you tell them, I just gave it to you free for a month. That was the discount. Now pay list price, right? Because that is your confidence in the fact that the product will work. But you're new, right? So you want them to test you out. You want to build confidence, especially if your competition is offering free pilots. You better not be asking for paid pilots. That's a sure shot way to lose. Nothing. It's just notional, right? The fact that somebody else would give it free and you're going to charge, they're going to be like, I'm going to test that out first, right? So that would be my opinion.
Thanks, Arjun.
And what we would always do is make sure that the final decision maker would sign off to say, if this pilot is successful, we'll buy the product. Right. So you want to make sure you get to that person who ultimately has got to sign the deal. Otherwise, they may not even know about it. It may be someone that's just playing with the technology, right? Maybe they're bringing in 4 or 5 products and kicking the tires. It's very hard to forecast those things, to understand what the real sales cycles are. And it's a great way, if you're going to do a free pilot, to your point, it's a great way to get the final decision maker to sign off and say, hey, we're taking this seriously. If it goes well, under these criteria, we will buy.
Yeah, thanks, Gary.
One last input, and I've seen this especially play out in the last 2 years. I find that across the board, it's no longer the CIO or CTO that's making the decisions. He's almost being asked to look to his team to say, what does the team think of this product? Pretty much they have an equal voice. So even more so if it's a free pilot and everybody gets to try it out, at their time and pace, and there is consensus built into, say everybody crows about the product, you have a winner right there, right? So that may also help you.
Great. I think Shikha, your question is also covered. Okay. So moving on to Mayank. Mayank, do you want to put your question now?
Yeah. Gary, you mentioned an interesting thing, mid-sized companies with enterprise complexity. So the kind of companies we are actually trying to sell to. Is the sales process similar to enterprise, or can you try something like a SMB there, or again, self sign up? What have you seen work?
You can. And the other thing is, so many companies are focused on the largest enterprises. Sometimes when you go to these mid-sized companies, they're feeling a lot of pain because they don't have a huge staff, right? They actually appreciate the fact you're coming to see them and you're trying to help them. So yeah, a lot of times the decision-making process is not as complex. There's a smaller organization. It's not as much as a committee buy. I think you could try some things, and they just appreciate you being there to try to solve their problems. You know, everybody goes after the big dogs, right? But in a lot of cases, it's a great way to build your referenceability to then go back up to the larger organizations as well. And I agree, this whole thing about free or paid, I think you should try both, try different things and see what works for you, right? Ultimately, it's around trying to get through the sales cycle. And I think a lot of it depends on the complexity of your product. If it's something you can hand off to them and you give them a login and password and they can play with it, then a free pilot is great. If it's something where it takes some services to implement it, import a bunch of their data, right, get the thing set up, that's more expense on your side. So in a lot of cases, you want more commitment because you can only do so many of those with your team, right? And it's a way to sort of weed out through the funnel which ones you ought to do.
There's a related question I put for this segment, mid-size. Right? Have you seen channel work? Once you have proven you have a few customers that the product works, but you don't have a brand. Have you seen channel work, and what can we do to make it work?
That channel can definitely work. And I think to the earlier points, a lot of it depends on how you're trying to build your brand. So in a lot of cases, if they're embedding into a broader solution, for example, right, then you may not get as much brand awareness. Or in some cases, you can say powered by, if it's a software solution, you can say powered by, right, the name of your company or something like that. A channel can definitely work. The one thing you got to be sensitive to, right, is how complete the product is, what the role is of the channel partner. You want to make sure you don't get into any kind of channel conflict, right, where a customer's going, hey, I can buy it from the channel for less than I could buy it from your direct guys. You just want to make sure you have an overall strategy around that. Because I've seen situations where all of a sudden large enterprises start going downstream buying from channel partners, right? They bring in a smaller version of the product. And in some cases that can kind of screw up your enterprise selling process. But it's so dependent upon, the product, the packaging, right? Who it's being sold to. I mean, would love to, have a deeper discussion with you to talk about, what you're up to.
Absolutely. Thank you.
Sohail, you want to go next?
Thanks, Anil. So I think my question was answered during the discussion, but let me put it out there anyways. So for an organization that's trying to teach enterprises, a new way of doing old things, right? So where would you put your focus on initially if you're trying to enter the US market? Would you put feet on the ground immediately and try to hit up these enterprises and mid-sized organizations, or would you spend a little time and money on some product awareness, some education, and so on through some marketing bits? And if you had to focus your energies on one or the other, Gary and Arjun, where would you put your money?
Arjun, you want to take that one first?
Sorry, I sort of got a little distracted. Gary, you go first. There's something at first.
Not a problem. My experience has been, go for, leverage advisors, leverage warm introductions, go get some anchor customers. All you need is 2 or 3, right? So 2 or 3 great brand names to play off of. And then you it's like the snowball starts going downhill. I would do that before doing, again, it depends on the product, right? But if you're selling to the enterprise, I would do that before I do a whole bunch of marketing without a lot of proof cases and referenceability, because you can leverage those early reference. I mean, it's amazing what 3 great brands will do in a new geography to get the attention of the market. That's where you can go to some of these mid-sized analyst firms. They can write a whole report about how you're changing the rules in a given industry. You can use that as a fulfillment piece to push out to your prospects and customers, right? It becomes this great snowball. But it always helps to get those first set of anchor customers. And again, I think we are consistent on find a way to get warm introductions at the right level. It's gonna take so much of the pain out of the process.
Yeah, and if I can add, I think for larger enterprises, I would definitely do more homework. Don't just throw it on the wall and see if it sticks. Right? That will not necessarily work. You can get lucky once or twice. Large enterprise do have complicated problems, and they will take more time to accept you, however small the spend. Right. So if you're serious about it, then spend some time on it. Smaller ones definitely are easier, both to get to the stakeholders and even they're willing to try it out with you. Right. There's not too much at stake and so on. So it's just larger company, larger problems. So give them that respect in a way.
Great point. Yeah, it's all about the business impact you're going to provide to them, and then as much as you can lower their risk to do it, you're better off. So find where the dollars are, right? And one of the things I used to tell our sales reps is go every quarter, right? The CEO and CFO do a public, when they do a report to the market, right? They talk about their key initiatives. Tie whatever you're doing back to some key initiative for the corporation. So Arjun said, do your homework. Tie it back to their core business priorities instead of just pure technology.
Makes sense. Thanks, gentlemen.
One other angle, I don't know if
we're almost on time, Sunil.
Yeah, we have exhausted our time now. So thank you. So Shyam, you want to
I have just one last question to Arjun.
Yeah.
Before we end, Arjun, how do we go about hiring sales talent in US? What are the tips in hiring great sales guys?
Leverage your network. There's no better way to get people that you can trust. There's a lot of sales folks, headhunters that are out there, but you can get pretty shitty candidates. It can be great on resume, great when they talk to you, they use all the right words, but you really have to also have a culture fit. That's no different here, right? Especially the early employees, the leadership employees that you want to hire, if you don't gel well with them, it's time wasted. Right? It's not just about how much money they make for you. You have to like working with them, and so do they like to work with you. So if anything, the 4 years and all the IPO that I have seen, it's not all the millions. It's really those 4 years of working with people. It's the friends I made every day that I spent building the product, building the company. That's really what feels nice. So I would say take time and get introductions through your network. You'll love the kind of people that you get to see.
Yeah, I would really quickly add, a lot of times investors will push you to hire a bigger company sales leader before you're ready, right? So if you're still trying to figure out the product market fit and you still need that early sales leader to get in there and actually get their hands dirty and close the deals and give feedback to product and product marketing, if you overhire someone that's used to bringing in their whole team and they want it all in a box ready to go, there's been lots of disastrous scenarios for that. So sometimes you've got to push back a little bit on investors and find the right fit, and like you said, nothing's better than working your network and working your Rolodex and people you know and trust.
So thank you, Arjun and Gary. It had been a pleasure interacting with you all. Thank you, Sunil and Shreya, for the opportunity. And I once again congratulate and wish you all the best to all the participants of InnoTrek 2020.
Great. Thank you so much. Thank you so much, Shyam, Arjun, Gary, for being with us and sharing your insights and journey and all. For the next session, we have one of the most successful B2B startup founder with us. And to host him, we have our own MR. By now, I guess all of you understand how important it is for all of you to know MR when you are looking for US as a market. I mean, from India to US, MR is one of the key for you. So MR, over to you.
Hey, thank you. Great for being back here at InnoTrek. I know it's virtual, and but it's a great group of startups that you've selected and we have selected. So welcome everyone. We get started with this, and I hope all the founders have their video on. Very much appreciated if you guys could turn your videos on and show some love for Abhinav and myself for being up this late at night and joining you guys. So thank you. Thank you, everyone. And want to welcome Abhinav Asthana. He's the founder of Postman. I think a lot of you know the company. Abhinav went to BITS Pilani, and then he started, I think, Postman in about 7 years ago. And he's had an amazing ride. Funded the company, moved to the US, recently got a $2 billion valuation as a unicorn. But what we're going to hear from Abhinav for the first 10 minutes is his personal story, the highs, the lows, the good, the bad. And then for the next 20 minutes, I'll moderate an interactive session, fire away your questions at him, and we'll get the right answer. So, hey, Abhinav, thank you so much for changing your schedule. I know you have a young one at home, and so thank you for shifting things around. Hopefully your baby is asleep and you can talk to us.
Yeah, just put her to sleep, and have my partner, my wife, to thank for that. But great to be here. Thanks for inviting me, and it looks like a great event. So happy to be a part of this, MR, and great to meet you all as well.
Super. So Abhinav, why don't you walk us through your story? How you got started. Like I said, the good, the bad, the highs and the lows, and lessons, and it would be fascinating to hear from you.
Sure. Yeah. I'll try to probably not make it, too boring. I'll begin with a small, maybe intro about me. So, for everyone, I started my life as a developer. I think back in like 6th grade, my dad, bought me my first computer, and I've lived in small towns in UP, wherever my dad was posted. He's a civil engineer. Now, he's in Lucknow. My family is in Lucknow. But at that time, we were in different towns around UP. So I kind of caught the computer bug early on. It was an extremely fascinating place for me. I was hooked on to gaming. Still am a little bit. Me and my co-founder Ankit, been playing FIFA a lot as he's just moved to the US. So I kind of got started with that, and my dad said, you got to make better use of your time, otherwise you're not going to have this thing anymore. So he pushed me towards programming, and I enjoyed that a lot. And I think this was back in probably early 2000s or kind of late 90s, and I was basically exploring. I kind of learned PHP. I learned Python, JavaScript, HTML, all of those stuff back then, and I kind of got good at building web pages and websites. So I kind of made my first consulting check in 8th grade when somebody sent me, like an $80 check, I think, for a website that I designed. Funny story is that I connected with that client of mine like 15 years later, and he was like, can you make some updates to the website that you designed? So the website was still active. My dad, liked it a lot. I think he kept the check, but just put some money in my account to show me that, I'd made some money. But I think, got hooked on to building stuff. And I think for the most part, I was basically designing things for others. And soon I realized that I really wanted to build products. And kind of that journey took me to BITS Pilani, and I built this thing called BITS 360, which was like a virtual tour, kind of social street view sort of a thing for the BITS campuses. And I kind of started seeing how, products are put together, things that don't require requirements from people, and you just, build something and people use it and they like it. Kind of through the BITS program, I ended up at Yahoo, where I met my co-founder Ankit. And, that's where kind of like the Postman story starts a little bit, because we realized that we were struggling a lot with APIs. And I guess, you'll hear APIs a lot in this conversation, but I'll just park that for a bit. But basically, after Yahoo, I came back to BITS, and I met my ex-co-founder now, and we started kind of thinking about different ideas to start a company. And we started with kind of like this Quora for I haven't actually talked about this, and it's coming back to me now. So we started for this Quora for Students thing, where students could ask questions and professors could answer. It was called Exam Crunch at that time, and the product didn't go anywhere. And then we realized that, hey, we have this Bits 360 thing that is really popular, and can we turn this into a mobile phone app, because Android and iOS was taking off there. So I didn't end up joining any company. I didn't sit for placements, and just decided that the best place for me is going to be building this thing. And we moved to Noida in New Delhi, and I found a friend of mine who also wanted to tag along in this venture. So basically, we were like 3 people. No, I learned all this stuff later, things to not do when you're starting a company. But basically, we just moved to Noida and started building this app. The app got fairly popular. We got featured on the Google Android Play Store. It was one of the first apps to be featured globally on the Play Store. We eventually had like about 5 to 7 million downloads of the app. We ended up raising some seed money in 2012, about $500,000 from investors in the US, and that was my co-founder then, who was the CEO, and I was the CTO. And it was actually a very difficult phase. We didn't have money for a long time. We couldn't hire people. We had like 5 people who were basically working at minimal salary, and everybody was just living with whatever we could we could spare, essentially, outside of servers and food. So we never got to like this quote unquote ramen profitability. And while I was there at Teleport Me, which was the name of the startup, I realized that I was working a lot with APIs again. And my team, which was at that time around 4 developers, was also struggling a lot with APIs. We were building multiple apps. We were building an Android app, a web app, an iOS app. And I could essentially split the team in 2 parts, and they were connected through APIs. And again, we had a lot of pains working with APIs, which was something I realized was true throughout in my life as a programmer. So I decided that this would be a good kind of distraction from the regular I think desperation of startup survival, and I decided to do this as a side project, as an open source side project back then. And I just put it up on the Chrome Web Store, which was a technology I chose for being fairly lightweight, and basically distribution was pretty easy. And I announced the project on Stack Overflow for an answer that somebody was seeking about REST clients. And I think that was pretty much kind of the launch as such. And what I noticed over the next few months, not years, was that this thing was taking off like crazy. Like developers all over the world were pretty excited about it. I got my second feature request from a developer at Google. I got my first 10 feature requests from someone who was in the MIT hospital, at some hospital chain that was affiliated with one college in the US. And I realized that I had never seen that kind of feedback before, and that was something that was very exciting. So I started spending more and more time on it, and soon I realized that the startup that I had co-founded was not something that I wanted to do, and my vision was not really aligned with my co-founder, and we decided to part ways, amicably. And I moved to Bangalore in 2013, and I mean, things worked out, so it was a good move. But basically, I was running out of money. I didn't have, I had like 4 months or 5 months of rent to pay, and that's when I think got in touch with Ankit again and said that, see, I don't know what I'm going to do, but I've kind of quit the company I co-founded, and I went to Bombay where Ankit was, and we started looking at this thing that was just super popular in the community. And because I was kind of running out of money, I devised a lot of ways to make money. I got sponsorships. I got I think I did some donations. I kind of made every form of money possible for a project. But it really wasn't a product until 2014 when we realized like how big the API problem was. And as we started looking at the data, we started talking to more and more developers, we started talking to more people, we realized that essentially the world of software development is changing from people just writing code to people essentially building more complex applications through APIs. And that problem was was something we could see was there around the world, no matter the scale of the company, no matter the industry they were in. There were developers everywhere who were struggling with building APIs and shipping APIs. And we said that, why aren't, existing companies in the space solving this problem? And we saw that everybody was basically focused on public APIs, and they were big enterprise products who really did not care about the needs of a developer. So, we just started and we had great validation. We had great feedback from the community. And fortunately, like venture capital also came through as people recognized how big Postman was, in their own portfolio companies. And that's how, Nexus reached out to us and said that, hey, would you like to start a company? And we said, we were on the path to start a company, but, if there is a check here, then of course, we will start it sooner. So in late 2014, we formally started as a company. Along the way, I met Abhijit, my third co-founder, and that was the three of us who started. I can cover more details probably later in Q&A, but we first launched a SaaS product, and our intention with that was basically that is the way we saw developers buy and how buying patterns were changing around the world. And the other thing for us was essentially when we started the company, one thing that was very clear to us was that we wanted to be a global company based in the US, because that's where all the feedback that we were getting was from. And we didn't want to be kind of a late follower or just a SaaS provider company. We wanted to create a new category that I'd say we have done pretty successfully over the last few years. And we wanted to be in the US to be closer to our customers. So after the first round came through, we just went heads down into building the product. It was a very small team, about 10-15 people for the first couple of years. We hired very conservatively, and then I moved to the US in 2017. The visa process was a bit of a challenge, and I'd say even more so is a challenge now. And in 2017, I started our US office. We had a VP of marketing and then eventually had a VP of customer success. And in 2019, we raised a Series B of 50 million. Then we raised a Series C of 150 million. And the company, continues to grow at a very rapid pace. We are at about 450 employees now, and more than 15 million developers around the world use Postman across 500,000 companies that we track. I'd say whichever product category that we are placed in, we typically are the leader in that category, whether it is among developers, whether it is among the enterprise. So it's been a fantastic journey so far, and I have a great team supporting all of this, so I won't take credit for all of it. But one thing that we are really proud of is that building of a great company culture. Our product team is in Bangalore. A lot of it now that we are more globally distributed. But one thing that we really focused on was basically that we need to have people who have the courage and the capability to build great global products. They were hard to find in the beginning, and then we kind of had to instrument the process on what does it take to build that kind of product. And now I think we've been doing that at scale. So I've been pretty happy about that. So I'd pause here, MR.
Yeah, no, that's a great opening thing. Quickly tell me one before people jump in, and be ready to ask questions. How did you get the postman.com? Was that easy to do?
So, it's interesting. So first I thought of the word postman. So I was just sitting on my desk one day and I said that, I want to kind of come up with a very simple name that is just very easily it can be communicated very easily across like different languages or different cultures or whatever. So that's the kind of name I think I had in mind. And then post is actually an HTTP verb, which means something when you're operating with APIs. And I thought, any tool that helps developers, like a Postman helps people. So that's what, I mean, the name just kind of occurred, and then there was like this inside joke there. So we didn't get postman.com initially. We did get postman.com. So the way to download the Postman product was to go to getpostman.com. And the interesting thing about APIs is that get is also an HTTP verb. So if you really were a developer, you would know the name there. So we only had getpostman.com for a while. And then after our Series B, actually just before the Series B, someone reached out saying that, hey, I'm interested in selling the domain to you. And then we did a deal and we got postman.com.
Fantastic. Amazing. Thank you. Questions for Abhinav? I know all of you guys are how Abhinav was, 6-7 years ago. So fire away, guys. Who wants to go first?
Yeah, I can go. Ganesh, yeah. Hi, Abhinav. It was a very inspiring story. Now, we are a SaaS player enabling intelligence for brands and retailers globally in select sectors and category agnostic, but started with fashion lifestyle. Currently, we are a SaaS player where people get to use the tool. Just wanted to check with you, we are also thinking, particularly in enterprise, lots of enterprises are looking at data as service in the sense, can you feed all the data and we will use your data and add value along with our data and then augment.
Mm-hmm.
So API as service is something that, we see that as a huge possibility and also eventually, huge scaling possibility across different sectors. So just wanted your idea or thoughts on, how do you progress this journey?
So, I mean, that's great to hear, Ganesh, and something that we are seeing across the globe, across many sectors. I think API as a service is a fantastic, model. I think depending on whether you want to address developers or whether you want to address enterprise, the interesting thing with APIs is that both models are available to you. You could build a developer-focused brand like Twilio or Stripe, or you could be, also, like a complement. On the other side is like somebody like Adyen, which is very focused on the enterprise. So the way I look at APIs is, are you offering like data capabilities, which are they uniquely differentiated? And are you offering, any form of computing capability or like a secret source? Maybe you're aggregating APIs in your platform, or you're collecting some data through, some other means which you can monetize. So, if you're seeing the traction there, I think, that's a great opportunity. I think we are seeing a lot of companies look at their storehouses of data and see how they can monetize those data sources, and they're investing a lot in it. I think the business model, what you adopt, could be, some place where you would want to do some customer discovery in. Typically, people think it's just pay per API call, and that's generally not true. Like pay per API call is something that you do when you have a very developer focused thing and you're primarily offering infrastructure services. So I think it's the only advice I would probably have is what kind of business model you come up with. But I'm a big believer on API as a service, and I think we're seeing a lot of traction in the industry.
Yeah, we haven't started using Postman. Already pinged my head of tech to have a look.
Well, the best developers are using Postman. So
great. Thanks, Ganesh. Who's next?
Hi, Amar, I can ask a question.
Please.
Hey, Abhinav, this is Jimmy from Floatbot. So we are a conversational AI no-code platform for voice bots. And from no-code, we want to now start being developer friendly and make it available through APIs. And one thing great that you guys have done is made it so easily, made it so easy the overall process at Postman that anybody can just start using it. Any developers can start using it. So, obviously, what were the things that you did, or probably what would be the right set of people that we can hire that can set those documentation, technical stuff, APIs so easily that it can be well adopted. Probably I see Postman as one of the very few platforms after Google that's so easily adopted. I mean, Google is very API friendly, and then you have Postman that's so API. So what was the thought process? I mean, was it your own process, or you had some set of skills that you hired to do that? And what would you recommend us to, if we have to do those similar success with APIs, conversational
Yeah.
AI for enable voice through APIs? What would you recommend us to do?
So I think I would invest in user experience design and probably developer advocacy early on. I think these two functions can give you some early insight into what your experience actually is. I think user experience design is more established. We invested very early on in it. We got a consultant, and then who became our first designer very early on, and we could see how the product is with respect to global kind of standards. It also goes with of course all of us were also developers, and we looked at ease of use as a primary criteria. One of our developer advocates talked about this time to first call metric as one of the key indicators of how friendly you are, and we've been working with Twitter and a bunch of others on that metric definition. But generally, we have seen that if to kind of get this sort of unbiased feedback in your design and engineering process, if you invest in user experience early on, and you invest in developer advocacy when you're trying to communicate the value of what you have built easily. So, I mean, the process essentially is you try to see how hard it is to communicate the value of your offering, right? And if you're running into like 50 pages of documentation, then you know that the experience is not right, right? So we focus a lot on that. Right now our design process starts with writing a blog post that basically says that what is going to be the end experience for a customer, and if the blog post is simple enough, then we're going to go and build the product. So there are some of the ways in which we have kind of institutionalized it. But if you're at an early stage, those are the two hires I would recommend. The more your engineers or the founders use the product, the easier it is, because you have less to kind of construct together in a group. But yeah, I think hopefully this helps.
Yeah, so user experience and developer advocacy.
Yeah.
And typically, what kind of skills they would like? What kind of background they would come from?
So yeah, I think we had to invest a lot in people in the early days, because we had to build a developer-facing product, and typical UX designers didn't really have that experience. So we got we got engineers who could do UX design. And with respect to developer advocacy, you need people who are probably solution engineers, but are also good speakers and can communicate well with the developer community. Those are the kind of backgrounds you have to see. So you have to be a little bit unconventional. You don't have to rely on experience, but more with people's motivation and whether they want to do this or not.
All right. Thanks.
Great. Thank you. Who's next?
Yeah, Abhinav, this is Mayank from Intellite. I believe again, Postman has grown on based of product-led growth, right? You guys don't go and sell at this scale. Maybe you do. What was the motivation behind moving to US back in 2017, and what changed in the journey because of that?
I think we I mentioned, right, Mayank, that one of the things I noticed, which was in my previous journey, was that if you're building a category leading, if you want to build a category leading product, you need to be in an environment that has a set of problems that you want to know very early on. So when I was building Postman, I realized that all of these developers were giving all this feedback for the product, which if I were to just go and ask around myself, I would not have found it. But because I saw all these people who are using the product and they're in the US, I said that I would want to get that feedback faster, right? And I would want to be ahead of the market rather than somebody else figuring it out and then replicating it. So we just wanted to be very early. I used to show up at people's offices and understand, how are they using the product? What exactly is their office structure like? And I learned a lot, like how teams are structured, how people divide themselves in pods. So I really had to kind of you don't see that with data. Like we are extremely data driven, but you just have to, just, I would just be like, hey, I love talking to you. Can I show up at your office? And I went to Seattle, I went to, VMware, I went to eBay, I went to, a whole bunch of different places. And I didn't have like any pitch deck or anything. I was just like, just tell me how you guys use the product, right? And I would learn not so much only about the product, but everything around it.
Fascinating. Great way to discover customers and what they want, Abhinav. Excellent. Who's next?
Abhinav, just to ask an add-on, hi, this is Jimmy again. Just to ask an add-on question, how would you capture all this valuable feedback? Do you use any tools to do that, and how would you pass on this to your team? So just curious to know that.
So we had roots in open source, Jimmy. So we used GitHub issues. Our GitHub issue tracker is still open, and we still manage our product roadmap through that. I think feedback became a very key, I'd say, data engineering activity for Postman very early on. Initially, when the number of issues were small, like all three founders, would go through those issues. But then we instrumented systems to capture that and systematically analyze that. And feedback comes in a lot of different ways. So we were on our GitHub issue tracker. We were the first. I think for like 3 years we were managing our Zendesk instance. So I set up our Zendesk instance, and I used to answer queries for like about 3 years. And Abhijit, my co-founder, became the highest, support person. So you kind of get feedback from there. Twitter, we aggregate. We now aggregate customer calls and sales calls as well. So kind of, with different kinds of people, we have different kinds of feedback. So in the early days, if we were talking to a company, we would record it, store it in Confluence, and then we had people dedicated to just figuring out key themes from it. So essentially, depending on which kind of process you want to fit that feedback in. Sometimes there are feature requests, sometimes there are bug reports, sometimes there are business problems. So we built different mechanisms for that. I still haven't found a single tool that does it. And the Postman philosophy became that we would want to go where our customers are and where developers are, rather than bring them into a place, because it's not the job of a customer to give us feedback. Let's not make it a job for them. It is our job to go and figure out whatever they are saying. Now we have now we track like brand mentions, and we have sometimes we even scan the web for wherever there are Postman mentions, because we have the engineering team capable of that.
Thanks.
Abhinav, can you talk a little bit about your business model? I know you have a huge developer community. So who pays you money, and how do you sell to enterprises?
So we have, I think someone mentioned it, we have a product-led model, which is now the more accepted term for it. So a lot of things that we have done fit in that, but I'll just describe it very briefly. Our base product is free. Anyone can download it. Anyone can use it. And then our product for teams is what we charge for. And we have 3 tiers right now: team, business, and enterprise. So developers use it. We have built product journeys through which people can start collaborating, start getting more and more value out of it. And once they start getting value, they can pay for the product self-serve, or they can talk to our enterprise team, sales team, or buying an enterprise license. So we offer a lot of services for free, but some additional services, are things that we charge for. Now, in a lot of places, we also have enterprise-wide customers where they want to standardize on Postman, and that becomes a more top-down discussion, with people. Our best customers are, kind of a mix of bottoms-up and top-down, intersecting in the middle, where the sign-off comes from top-down buyer, but champions are created through the bottoms-up process.
Great, thank you. Shreya, I'm just checking up on time. Are we pretty much at the end of our session? I don't want to keep.
Yes.
Up.
Yes, we are, Emma, but yeah, we can take one last question from the audience if there's any last question.
If not, I have one another question. So, no, this is great on the business model. So, what are your challenges in the company that you would like to have done 6 or 7 years ago? You would have liked to have known, because all these guys are in that part of the journey now.
I think every year we realize culture is more important than process. And we realize it at different levels, and I'm telling you this, and next year I'll repeat the same thing. We often realize, and we are kind of in the thick of these problems all the time, that you have to hire people, you have to convince investors, you have to convince customers, and when you're kind of through that scaling phase, we had to consistently have like these culture champions inside the company. So we always, focus on that. And I think that was particularly hard for us as, I had to move over to the US and start the company afresh. If I had to do it again, I would have moved my, both Ankit or maybe all three of us would have probably gotten our visas done earlier and moved to the US. I think that was a hard process, to kind of kickstart the culture all afresh with just me there. And I think soon we got a hang of it. Now we are more than 400 people, and we still have to be very, very vigilant about it. The moment culture gets diluted, no amount of process fixes it. Like, I think and that's the kind of thing that we generally tell ourselves, like, when is it a process problem and when is it a cultural problem? And then just adding more and more process actually makes it worse. So that's what I think I would keep telling myself.
Great. Abhinav, listen, thank you so much. I know we've kept you up late, but really appreciate the advice. I think a lot of these things stood out to me, the culture part, you also about getting the customer experience, advocacy, user experience. I think there were so many takeaways from this session for founders, not just on this call, but for anyone else who listens to this, video a bit later. So thank you so much once again. And I want to hand this back to Shreya and Sunil and the NASSCOM team.
Thank you.
Hey, thanks for having me here. Yeah, and thanks for the NASSCOM team. It was a pleasure to be chatting with everyone.
Thank you so much. Thank you, MR.
Thank you.
Sunil, you would like to just conclude? Would you like to add anything?
Thank you. Not just Emma, but all the speakers and all the moderators from the core team and people from outside who joined us. Thank you, founders. We look forward to have more engaging sessions. So we have the next session of today, which is after almost 10 hours. So we'll catch up again for the CXO Business Connect today, where we have 12 business leaders coming and meeting you. Thank you so much. Thanks, Abhinav, once again.
Thank you.
Anyway.